Rocket Labs is rocketing higher again today in reaction to the news that the company placed 7 small sats for 3 customers into orbit yesterday on a launch that also brought the company a step closer to reusing the rocket's boosters. So this is a huge deal for this company as it is a big step in the company's history. So the rocket lifted off of the company's Launch 1 complex in New Zealand. The launch was scheduled for the 14th, but got postponed to yesterday. And the 4 Starlink satellites will test the ability of spacecraft to operate autonomously as a swarm flying in formation and maneuvering without commands from the ground. The 2 Spire satellites will join the company's constellation of more than 100 spacecraft. The spacecraft, the Leo 3 is the largest spacecraft on the launch and was built by University of Toronto's Spaceflight Laboratory for Telesat. It will also allow the Canadian satellite operator to continue tests for its future light speed consolidation. It has been performing with other prototype satellites that is nearing the end of its life. So the Baby Come Back mission also offered Rocket Lab another opportunity to test its efforts to recover and reuse the rocket's first stage. The company made several modifications to the rocket and its recovery technique as it switched from earlier plans to capture the falling boosters in midair to allowing them to splash down in the ocean. So one last note here, with the missions, we've made big strides towards reusability with Electron, and we are now closer than ever to relaunching a booster for the first time, and that was from their CEO. So the company added the recovery booster was in great condition. So this recovery booster, basically, sending a rocket up in the sky and, not just letting it burn off in the atmosphere. You're actually getting something back that you can reuse. This is a concept that actually SpaceX started with. They were the first ones to send rockets into space and not just have, kind of the launchers and everything that goes with it just kind of burn off in space. They actually have it come down and they reuse that, and it saves a bunch of money. It makes space travel in general way more feasible. So with that being said, let's take a peek at some technical analysis for the stock. But first off, let me tell you what I'll be covering today in the video. So I'll be going over the chart and giving a price prediction. I'll be going into short interest and letting you know kind of what the stock looks like in terms of short squeeze potential. And then I will go over some financials for the company. I'll compare those financials to the peers, and then I'll dump into a fundamental story I wanted to talk about, and then I'll dive right into some analyst upgrades that we have seen. So with that being said, let's take a peek at this chart here. So we topped out at about $7.30 on August 15th of last year. So this is a significant level of resistance for the stock, and it's nice to see here that shares have actually burst through this resistance level, and this nearly coincides with where shares had bottomed in January of 2022, also where shares had bottomed in March of 2022. So this seems to be a significant level in which we're seeing consolidation for shares. We came up and tested this level, moved lower, and obviously today we bursted through this level, which to me tells me that there is more upside to come for this stock. Also, just a couple weeks ago, we saw the 50-day moving average cross above the 200-day moving average, which for those that don't know, just signifies bullish momentum and is called a golden cross. So awesome to see that there. That definitely is a good sign of momentum, which when you combine it with this break of resistance is a great sign for shares. And here's one reason as to why I think this break of resistance is likely going to hold, and we will see the stock use this level as support over the coming weeks. It's because we got a massive spike in volume as we broke through this resistance level. So anytime you see a massive jump in volume coinciding with a break of support or resistance, it just lends more credence to that support or resistance level, as the volume implies that that level will likely hold. So you can see here that this was the most volume for the stock since June of last year, actually. So over a year, this is kind of the top in volume. This is the highest point we've been in volume for over a year. So that's definitely a good sign to see for shares. Love to see this break of resistance coinciding with volume. But the question is, where do we go from here? And there is a significant level of resistance I'm seeing in the chart, which is where I believe shares will likely end up over the coming weeks. Honestly, it could be pretty soon. So I think about 975, which is basically where the stock IPO'd back in December of 2020. I think that would be a good level for shares to kind of consolidate. So my official prediction is we see a move over the coming months, maybe weeks, maybe pretty quickly here. We see about a 30% move up to this, $9.75 level, over the coming weeks. So really do like the news here. It kind of is matching up with a great breakout technically. So honestly, with Rocket Labs, there isn't much to hate when you look at the chart. The one thing that gives me cause for concern is the fact that shares are overbought according to RSI. And for those that don't know, RSI, if we get a signal over 70, it typically means shares are overbought, meaning that they could likely turn around and start moving lower. And we actually haven't been this overbought in actually no, not that long ago. We were this overbought in June on the 13th. So we did see a pullback in the coming days, but obviously we saw a larger move over the coming weeks. So don't see this overbought condition really being a huge headwind for shares technically, especially given how beautiful this technical setup looks, to be quite frank. So I really think this setup is awesome on the chart. So really wanted to reiterate that and express my opinion in that regard. So with that being said, let's take a look at short interest. So short interest is at 8.7%. That basically means 8.7% of the float is sold short. And then we have 6 days to cover, which means that it takes 6 days of average volume to cover the amount of shares that are sold short. Typically, when we're looking for a short squeeze, we look for a days to cover ratio of 10 or more. That would really signify a short squeeze. So 6 isn't bad, but it's definitely not telling me a short squeeze is imminent. So good sign there. 6 is solid, and to kind of give this a grade, I would give this like a B minus in terms of short squeeze potential. It's definitely no AMC or GME, obviously, like we would all love to see. But let me just go through this article written by Bold Investor on Seeking Alpha here. So I'll cover a couple of the interesting points that he made. So Rocket Labs reported annual revenue of $211 million, with about $60 million of this stemming from their electron launch business. So as readers can see, over the past 6 quarters, Rocket Labs has conducted 15 launches with a current cadence of 3 launches per quarter. On average, each electron launch generates about $6.7 million. However, per the CFO, the average selling price currently stands higher at about $7.5 million per launch. So Rocket Labs initiated its HASTE, Hypersonic Accelerator Suborbital Test Electron Program, in April this year. The program involves a modified version of the Electron rocket for hypersonic suborbital testing and payloads. According to the CFO, though, Adam Spice at a Stifel conference said the program could also significantly increase launch cadence, which is awesome to see. We really do want to see more launches as the company kind of moves towards profitability. As Spice noted, we've got several programs that we are engaged on for this type of for the Hates opportunity. Ultimately, we see, dozens and dozens of launch opportunities for this kind of program in the not too distant future. So this is not a one size, two size thing. We believe that it has the opportunity to scale meaningfully to be a real meaningful contributor to our launch cadence growth. So that's very important, right? Like this company can be profitable. It just simply needs more volume, and it needs the ability to reach more customers. So the company can reach a lot more customers if it's able to increase its launch cadence, right? Um, you know, a company like this one really has as much demand as it can take, really, right? It just simply needs to build out more capacity to obviously send up more rockets. So that was what I wanted to cover there. But with that being said, let's take a look at some of the financials for the company. So, this is Seeking Alpha here. They put the valuation, the growth, the profitability, all these metrics relative to peers. So this company gives grades relative to how the stock grades out relative to peers. So valuation grades out as a C compared to peers. And when we take a look at that, obviously the company doesn't make any money right now. But the price to book ratio is at 5.15, which isn't a horrible number. Obviously, it's nearly double the sector median. But 5.15 basically tells me that the market cap is 5.15 times the book value of this company. And that book value would just be equipment, cash, property. So very firm assets. So definitely do like to see that there. But overall, obviously, valuation is kind of tough for this company given how new they are. And they obviously aren't profitable. But with that being said, let's take a look at growth. So year over year revenue growth is at 165% year over year. And that is obviously a pretty solid number, especially when you consider the sector median is 12%. So we're significantly above the peers there. And then revenue growth for the next 12 months is at 93%, which is pretty good and well above the peers at 8.3%. So overall, it's really good to see that these growth numbers are very high, because anytime you have a company that isn't making money, you always want to see growth metrics rationalizing that high valuation, right? So it's definitely good to see here that this company, although it's not making money, we have high growth, and which is kind of incentivizing people and incentivizing investors to kind of dive head first into shares without having any EPS to go off of. But with that being said, let's take a peek at Rocket Lab's profitability numbers here. So gross profit margin is at 9.6%, which is well below the sector median of 29%. But is still a decent number. This tells you that the company is making money on everything that it sells. So this number here is basically revenue minus cost of goods sold. So it's definitely a good number to tell you, like, hey, if this company was able to grow its revenue a ton, which it is projected out to do, and it did over the last 12 months, well, then they'll be able to make some money as they make money on every single thing that they sell. Like, for them to make money, they don't have to adjust their operations, right? They just need more volume, basically, is what this tells you. So that's good there. Like to see a positive gross profit number. Net income margin, on the other hand, is minus 68%, which is honestly a pretty bad number, well below the sector median of 6. And then cash per share, honestly, is a bit scary, at 44 cents per share. And I'll dive into the balance sheet right now to kind of tell you if I think this company will be diluting shares anytime soon. So, first off, let's compare all these metrics to the close peers here. So you can see those names up here. So over the past 12 months, Rocket Labs is the #1 performer in terms of stock price relative to all the peers, which is awesome to see. But that really has just changed, since the month of June. That really has been a new theme for the stock. But it's good to see, because generally, once a stock starts to outperform its peers, it tends to continue. Obviously, the company doesn't make money, and many of the peers don't either. But we can see here that 3 years out, the company is projected to be profitable at 171 times PE, which is obviously extremely expensive given the S&P 500 is about 20 times PE, and you got Microsoft at about 36 times PE. So that is obviously an extremely expensive stock. But when you look at the peers, it's not super shocking, right? We still have some companies not making money here. Although there are some peers, with lower valuations. So overall, in terms of valuation, the stock doesn't grade out great. And then revenue growth. Revenue growth is really why the company is outperforming the peers. It's why the company is trading at higher valuations compared to the peers. So we have revenue growth year over year at 165%, which is well above the peers, like I said. And then revenue growth, even in year 3 years out, is well above the peers as well. So not only does Rocket Labs have very good revenue growth, but they're actually being able to sustain that revenue growth, which is awesome to see. And then gross profit margin is at 9.6%, as I had said, which doesn't look great when you compare it to some peers here. I see 26, 34. So honestly, in terms of profitability, the company doesn't grade out great. And we see obviously the net income margin being the worst amongst peers. So profitability not looking pretty. Valuation doesn't look great. But growth metrics are kind of making all these numbers work. And then when we take a look at short interest, the stock is the most shorted stock amongst all the peers. And then here's for the money shot. Here is for the balance sheet. So the company has $398 million in cash, but only $150 million in debt. What does this tell me? This is amazing. So this tells me that the company has $290 million more cash than they do debt, which is awesome to see, right? Anytime you have a company that's in massive growth mode, isn't making money, they're essentially burning money. Like that's what's happening. So anytime you're in a situation like that, you never want to take on too much debt, because when you take on too much debt, you're kind of under the gun of share dilution. So if I were Rocket Labs and I had $10 billion in debt, well, then I would really only have one option to finance my future operations, and that would be to issue shares, dilute shares, which people hate, right? Share dilution is never met positively. I've never seen a stock react positively to issuing shares, right? That just makes the existing shareholders, that makes their shares worth less, right? They own a smaller piece of the pie of that company, if you will. So Rocket Labs definitely seems like it's in a spot where it doesn't have to issue new equity to kind of keep the company going. So that's awesome. I really do love to see that there. And one of the reasons why this company stands out is its balance sheet. The only other company that has a solid balance sheet is EVEX, which actually has zero debt, which is pretty impressive. So definitely do think this company has, one, an awesome balance sheet, two, stellar growth numbers, and then the only two concerns I have is that valuations are a bit high and profitability metrics could be better. But as the company, like their CEO said, as the company is moving towards higher frequency of launches, unit economics, right? That should help bring costs lower and push that gross profit margin higher so the company makes more on what it sells. So that's kind of how the financials stack up. And obviously, this is a pretty long video here. I see we're almost at 20 minutes, so I'll try to keep this quick here. What I'm about to do is I'm going to cover the analyst ratings. So we have 6 buy ratings on the stock, 1 overweight, 1 hold, and then 1 sell. So overall, Wall Street is pretty bullish on the stock, and we can see the highest price target is actually at $30, which is pretty awesome to see, and that's Canaccord actually with a $30 price target, excuse me. So we also had Citigroup initiate coverage on this stock with a buy rating over the past couple months, which I thought was awesome. But when you look at all these numbers, the consensus price target is $12.50, which tells me that Wall Street thinks that this stock should be trading at a higher price than it is right now, which is always a good sign, right? They're the ones doing that massive buying, so you like to see that. Awesome to see there. Like I said, I think the stock is in major breakout mode and will have a 30% run over the coming months. Obviously, that's just my opinion, not financial advice, do your own research, but that is kind of how I see things for this stock. That's how I see things shaking out. But before you kind of dive in headfirst to shares and consider this as a long-term investment, definitely be sure to keep an eye on that valuation, keep an eye on those profitability metrics. Hopefully this 9.6% gross profit margin improves. But with that being said, I definitely do think it is, at the very least, this company is a good trade just from a technical standpoint. So that's my opinion on Rocket Labs. If you watch this entire video, you're a trooper. Leave a comment. Let me know what I should be covering next. But with that being said, I will end the video there.